Welcome to my first video for the course. Now before I get into the content, I suggest you take a block of paper or your pad to take notes because you'll remember so much more by being active during the lessons. And without further ado, let's get into our first video. We'll first look at the difference between an investor and a speculator. Those terms were both coined by Benjamin Graham in his book The Intelligent Investor. So, what's the difference between an investor and a speculator? Well, the investor always researches carefully the companies he plans to invest in, and he always does his homework. A speculator, on the other hand, just randomly invests his money in companies he thinks might grow, but he has no actual basis for thinking that. Well, now here you have a few key points to remember if you want to be an investor. First of all, you have to know your area of expertise. You have to know which area you can invest in because you know the companies. So if you're a sports guy, then you might invest in sports companies. If you like drones a lot, you might invest in drone companies, even though that's maybe a bit too niche, but you know what I mean. Second of all, you can't shy away from doing grunt work because that's what gets you the actual results. Third of all, you have to learn how to compare between different substitutes. So, basic example, if I want to invest in an airplane company, do I invest in Boeing or do I invest in Airbus? Well, that's for you to decide, and that's what we're going to learn in this course. And fourth, and most important of all in my opinion, is to be able to think rationally. An investor always has to think rationally, not emotionally. Now at this point, a quick disclaimer, because I won't teach you how to earn money quickly. I'll only teach you techniques that you can apply to maybe earn money in the long run. But first of all, the future is never safe, so you can't be even sure that you will earn money. But the money you will earn will be based purely on knowledge and techniques and not on speculating, because everything else is scamming. People who tell you can earn money quickly are scammers. Of course, there are a few rare exceptions. They are extremely rare, and they usually don't last very long. Now during the course we'll also differ between two different types of investors, tigers and eagles. Now don't worry, I'm not trying to insult your intelligence, you obviously know the difference, but when you compare them to different investment strategies, it becomes slightly more interesting. Okay, take two. Take three. Now during the course we'll also differ between two types of investors, tigers and eagles. Now, obviously you know the difference between tigers and eagles, but when you compare them to different investment strategies, they become slightly more interesting. Let me just quickly add that both tigers and eagles are Ibex Predators. They're at the top of the food chain, and that's just to indicate that I don't prefer one technique over the other one. They're just two different techniques that in my eyes are both perfectly as valuable as the other one. Okay, now to put them into investing terms, tigers are hunters. So they will observe their prey and then go for it. Tiger investors are much the same because they analyze a company, they observe the company, they read about the company, they research about the company. And once they've made a decision, they decide to go for it or not. Eagles are slightly different because they have two approaches. Either they eat dead animals that other hunters have already killed, or they hunt easy prey. Eating dead animals would be the equivalent of investing in funds that tigers are managing, if you see what I mean. And hunting easy prey would be investing in safe investments, such as high-grade corporate bonds, government investments, and other relatively safe investments. One thing to remember is that tiger may expect some high returns, but that is only if they actually do their homework. And even then, nothing is guaranteed. The only thing I'm saying is that since tigers take more risk, their beta, which we'll talk about in another video, is much higher, which means that over the long term, they may expect higher returns. But we'll talk about long and short term in the next video. So until then, just remember that tigers, since they take more risk, may expect some high returns. Now back to the tiger and eagle investment strategies. First I want to tell you that they are overarching concepts. So that means that as we'll get to know them better, you'll understand the similarities and differences between them. but also you'll understand that there is no one line between them that can separate them exactly. Second, how do you decide if you want to be a tiger or an eagle investor? We'll look at that right now. Now, having said that, I've got a short list of questions that you can answer for yourself in order to determine whether you want to be an eagle or a tiger investor. The first is, do you have enough time and willpower in order to gather information and analyze it? The second is, do you have a strong enough groundwork? That means, do you have enough basic knowledge in order to make informed decisions? The third is, are you okay with seeing investments vanish? Are you okay with losses, or at least seeing a part of the investments vanish? The fourth is, do you see losses as challenges? Do you see as a potential improvement, or do you give up? The fifth is, are you okay with not checking your portfolio every day? Because you might just get obsessed and lose your mind over it. The sixth is, are you cool? Are you able to stay cool, take emotional distance, and think rationally? And the seventh is, do you enjoy puzzles? Do you enjoy challenges? Because let's face it, investing is a puzzle, investing is a challenge, and if you don't enjoy it a lot, then it's not worth spending your time on it. If you can comfortably answer all of those questions with a yes, then I recommend you choose the tiger investing strategy. If you answer 1, 2, 3, or even more with a no, then I recommend you go for the eagle investing strategy. And keep in mind that no strategy is better than the other one. Some people just might enjoy researching and analyzing, and others might want to have their money work for them and do something else. Of course, you can always switch up investment strategies because your life isn't a single constant, and as your circumstances change, you might want to switch from one to the other. So just keep in mind that this decision is completely adaptable. Your main takeaways from this lesson should be the difference between an investor and a speculator, and you should understand that you can speculate if you want to gamble a little bit of money just for fun, but if you want to make money over the long term, then investing is definitely the way to go. The difference between an eagle and a tiger in terms of investing, and you should also have understood, and I want to repeat this, but no return is guaranteed ever. You will never have any guaranteed return, be it in investing or anything else, so just keep that in mind. Thank you for watching this lesson all the way to the end. I would really appreciate a like, a comment, and a share with anyone who you think would benefit from this course, and see you very soon in the second video.